All right, everyone, the new inflation data is now out. We are talking 2.7% inflation. That is the official CPI number that was just released. And that is the number that is being celebrated by everybody on social media and TV news. I was literally watching the news this morning, getting ready for my day, and I realized, why is everybody happy about this? Just because it's better than previous numbers, this is the number everyone is supposed to feel good about. This is the mission accomplished number, apparently. So if you hear 2.7% and think that that sounds manageable, well, that reaction makes total sense because that's exactly how the number is designed to sound. But I hate to break it to you, inflation doesn't operate on vibes, it operates on math. 2.7% inflation isn't some one-year inconvenience. That is a permanent annual reduction in purchasing power that compounds every single year that you hold dollars. So people think that this number is healthy. Wait until I show you the actual math over longer periods of time. This will terrify you, and it will make you more thankful for Bitcoin. Before we get into it, I really want you to remember this simple truth. Small numbers, they become very serious problems when you give them enough time. Now, this is where the math stops being polite. This slide right here, I'm going to show you what happens to $1 at a 2.7% inflation rate over time. After 20 years, that dollar buys 59 cents worth of today's goods. That's correct. 41% of your purchasing power totally destroyed over 20 years. You might now be starting to think, wow, I really need to race to buy Bitcoin to avoid this catastrophic mess. This is what people call healthy. And remember, CPI is a fake number anyway. The way that it's calculated is ridiculous. They calculate it with a basket of goods, and whenever the numbers get too high, they just replace the items in that basket. You don't need to eat steak dinner anymore when we can just have you eat cat food for the protein. Now, after 30 years, fun fact, that same dollar buys you about 45 cents of today's goods. That's 55% of your purchasing power gone after 3 decades. After 40 years, well, that dollar turns into 34 cents, and after 50 years, that's 74% of your money melted away, 26 cents of today's goods. So with this healthy number, with nothing dramatic happening, no crisis, no emergency announcements, the dollar literally just did what it was designed to do. And this is why inflation feels confusing, because people hear the prices went up, but the more accurate statement is that the units that you're measuring the prices with continues to shrink. If you spent your life saving diligently, avoided risk, and you did everything that you were told, the math behind inflation still wins. And that's a very sad truth. And remember, that's before taxes, before fees, before any bad investment decisions. This is the baseline. So when people say that inflation is under control, this is what under control looks like over a normal human time horizon. According to these people, it is healthy for almost half of your purchasing power to be destroyed in the time that it takes for your child to become an adult. So now let's translate the purchasing power into something that everyone actually understands: prices, because people look at the prices of things when they buy them. If something costs $100 today, this is what 2.7% inflation does to it over time. In 20 years, that same $100 item costs $170. In 30 years, it costs roughly $222. In 40 years, you're talking just under $290. And in 50 years, a $100 item today ends up costing $380. And remember, nothing about society improved. The product definitely didn't get better, the service didn't get better, and the quality definitely didn't get better. All that changed was the value of the currency that was used to price it. And this is where inflation stops feeling abstract for the normal individual, okay? It shows up in housing, education, healthcare, insurance premiums, food that you eat, the big stuff that people just cannot opt out of. What makes this worse is that the wages do not compound at a fixed rate, okay? They adjust slowly, they adjust unevenly, and often politically. Prices move first, the paychecks follow later, if they ever follow at all. And we know that ever since Nixon took us off the gold standard, the wages haven't kept up in the slightest. So when inflation is described as stable, what that really means is that the process is happening in a predictable, ongoing way every year automatically. And I'm showing you this graph to make one thing clear. If your savings do not grow faster than inflation, you are not treading water, you are falling behind with mathematical certainty. The reality is inflation halves your money a lot faster than you think that it does. There is this basic shortcut in finance. I don't know if you've heard of it. It's called the rule of 72. You divide 72 by the inflation rate, and it tells you roughly how long it takes for purchasing power to get cut in half. At 2.7% inflation, that number is just under 27 years. That means that if you start your career today and you simply save in cash, by the time that you are in your early 50s, half of what you saved is gone in real terms. And this is not a worst case scenario. Remember, this is the fake number that they're using to make it feel healthy. This is the thing that they are celebrating. If you live through a full working career and then a normal retirement, the halving happens more than once. And this is why people feel like they did everything right and still fell behind, because the system penalizes time itself. And once you see this, it becomes very apparent why long-term saving in a depreciating currency cannot work. It's not about discipline or financial literacy. It is about simple arithmetic, folks. And you gotta ask, who actually pays for inflation in society? Well, let me clue you into this. Inflation doesn't hit everyone evenly. In fact, it just concentrates pain. If you are paid an annual salary or an hourly wage, your income adjusts very slowly. Raises are annual, inflation is daily, prices move first, and then paychecks negotiate later. That's just the way that things are if you hold savings in cash or these low-yield savings accounts or government bonds. Well, inflation quietly taxes those savings every single year. There is no form to file, there is no line item, and if you are trying to buy scarce necessities like housing, healthcare, education, or insurance, well, inflation compounds the problem for the working class, because these prices, they tend to rise faster than averages, not slower. And what this creates is a system where people are forced into risk just to preserve their purchasing power. This is why people are sports gambling in record numbers. This is why people are playing the government lottery trying to win the 1.5 billion Powerball. Because you're no longer choosing to invest because you want upside, you are investing because standing still guarantees huge loss. So the system can be stable, but this is why people will always feel financially stressed. Fun fact for you, the math pressures everyone at once, but the least flexible people feel it first and hardest. Inflation is often described as neutral or manageable. For most households, though, it is neither. It quietly reshapes behavior, incentives, and long-term outcomes in ways that are very difficult to ever reverse. So this is where everything comes together. At a 2.7% healthy inflation rate, the math is very clear. Half your purchasing power disappears in roughly 27 years. About 3/4 is gone over 50 years. And remember, this is not my hypothetical here. This is just the math. This is our baseline monetary environment. What a total joke. We all know Bitcoin offers a way out of this losing equation. It introduces an asset with a fixed supply schedule, no annual dilution, no requirement that value must decay over time. So this is not about short-term price movements, okay? It is about long-term savings integrity. When the default currency guarantees to lose value over time, people are forced to speculate just to keep up. But Bitcoin gives people the ability to save without ever playing that game. The point of this presentation is not that inflation is evil or that policymakers are malicious. The point is a lot simpler. The math doesn't care about intentions. If money loses value by design, people will seek alternatives by necessity, and Bitcoin exists because the system needed an escape hatch. And once you understand the math that you're seeing right here, the demand for Bitcoin becomes very, very easy to explain. And then once you accept the math that we just walked through, well, the next question is pretty obvious. How do you make Bitcoin last beyond one lifetime? Buying Bitcoin is one step, holding it securely is another step, and passing it on responsibly is the hard part. And this is the problem that Swan generations is built to solve. Swan Generations allows families to make irrevocable gifts of real Bitcoin to the next generation, not exposure to Bitcoin, not a proxy to Bitcoin. I'm talking actual Bitcoin held in a dedicated wallet. An adult administrator manages the wallet until the heir reaches a chosen age, typically between 18 and 25. That removes the risk of early access while still guaranteeing ownership. And it also integrates Bitcoin education for the entire family, so the heirs of the Bitcoin, they actually understand what they're receiving and why it matters. This is not just a transfer of value, this is a transfer of understanding. Traditional estate planning was designed around assets that lose purchasing power over time, and Bitcoin flips that assumption. When the asset appreciates over decades, custody, governance, and discipline matter more than ever. Swan Generations exists because inflation does not stop at one lifetime. If families are serious about protecting their purchasing power, they need infrastructure that thinks in generations and not quarters. This is how long-term monetary preservation becomes durable, intentional, and responsible. Visit swanbitcoin.com/generations to learn more. My name is Adam Livingston. I am the Bitcoin Wizard. Have a terrific day. Do not party too hard. Class dismissed.